Hello traders, today is the 10th of February 2013 and the time in London is 34 minutes past 6 p.m. In New York, 34 minutes past 1 p.m. Happy Sunday to you all. This video is about the formation of a bearish butterfly pattern. Alright, we want to know where and when, okay, a bearish butterfly pattern will be formed, okay, and the criteria for the bearish butterfly pattern. We want to also understand the pattern, how the pattern is formed, why the pattern is formed, okay, and to avoid trading mistakes. Okay, let's get started. We are looking at the monthly chart of AMGM, Epic AMGN, alright, American stock, and we are on the monthly chart. The first condition, the first question that we must ask is where and when do we see a bearish butterfly pattern? One of the trading mistakes that traders are making is that they see a bullish pattern in a downtrend and they will take it and they will lose. But we know that a bullish pattern will take place in a bullish trend or at the end of a bearish trend. The same thing when we are using any pattern, we want to know where and when do we see this pattern. So if we see the pattern somewhere else, we will be very, okay, cautious. For the bearish butterfly pattern, we want to see it at the end of a motive wave or at the end of an uptrend. This is it, the red line here. The price should move up big time. The bull should be dominating the market for a while. On this monthly chart from 1998 up to call it 2000, AMGM stocks, American stock, was very bullish. Good. The second condition, this is the first condition, price must be in an up move. Next condition, the price must pull back. So we see a kind of correction, which means the bulls that were dominating the market must take a kind of profit. That profit taken in an uptrend, that's why we label XA. This is this point here, we call it X for X-ray. This point here, we call it A for alpha. Okay? XA. So there is an up move, there is a correction. When a correction is completed, we are now thinking of Fibonacci patterns. But we don't know which pattern is going to be formed. But we know if you understand the formation of each Fibonacci pattern, we will recognize them. That's why we are talking about the bearish butterfly pattern. So price start going up. What do? From A, price start going up. We will draw our Fibonacci lines. Price went down from X to A. We put our Fibonacci line there. The price start going up. We are watching it. Now, as the price is approaching key Fibonacci level, today we say, oh, this is a bad pattern. This is a Fibonacci pattern. This is a Gartley pattern. This is a crab pattern. But just wait. Draw your channels and watch it. Don't get into Fibonacci gambling game. Okay? Just draw your trend line and watch it. Don't sell because the price is at 50%, 61.8, 78.6. Just draw your line until the price come out of the bearish channel, because we know that the price is doing only three things: rising channel, declining channel, rising channel, declining channel, horizontal channel. Three things, full stop. So we will draw our channel here, monitor it, and just watch the key level. Finally, it came out of the channel at a 78.6% Fibonacci retracement level of the SA. If the price was in an uptrend and then, okay, traders took profit and the price pull rally in a downtrend from here to here, which is the A to B, up to the 78.6%, the first Fibonacci pattern that is coming to our mind is the butterfly pattern, the bearish butterfly pattern. So as the price came out of the channel at 78.6%, sometimes you will see the price will go even, in this case it went to 88.6 before coming down to this level of 78.6. You see this is 88, It went to touch it. Can we see? Can you see? All right. All right. It went to touch the 88 only to close near the 78. It's a zone. It's not a line. So when we see it coming out of the channel, we don't just sell because it reached a key level of 78. Draw your channels. Draw your channels. Okay. Is it out of the channel? Break below. Retest. Turn around. Now it came out of the channel. Yes. At 78.6, we are thinking of bearish butterfly pattern. So then after we see that, we are thinking that the price has a high chance to retrace now the AB, which we want to see another retracement of the AB between 38.6% is a criteria for a butterfly pattern, between 38.6%, 38.2%, 38.2%, and okay, 88.6%. Between 38.2 and 88.6% Fibonacci retracement level. Sometimes, because the smart money want to buy at the best place, instead of stopping at 88.6%, they probably go even to 100%. But just highlight it and watch it. All right, watch it. It's a kind of distortion, but it's a very smart distortion because the smart money want to buy at the best place. They don't want to stop at 88.6% zone. They will push it to 100%. Just keep eyes on it. Draw a line at 88.6%. If it goes to 100% and return back above the 88.6% zone, game on. All right. In this scenario, the B to C was 61.8% Fibonacci retracement level of the AB. So this move from here down to this level is 61.8% Fibonacci retracement level of the A to B. The second criteria for the butterfly pattern is now completed. So we see first the A to B was 78.6% Fibonacci retracement level of the SA. Now we see the BC, which is within the 38.2 and 88.6% Fibonacci retracement level. In this case, it stopped exactly at 61.8. Remember, should be between 38.2 and 88.6. Sometimes it may even go to 100%. But in this, on this chart today, was at 61.8%. So the second criteria for the bearish butterfly pattern is completed. The pattern is being formed at the right place and also at the right time because we see that there was an up move and then there was a corrective move. Now we see a retracement 78.6. Now another retracement 61.8. Now we will say that the next target zone to form the C to D, which are called the delta zone, talking about convergence signal. Go to www.stochastic-macd.com. Click on the convergence signal. Okay, very important. So because we have now A, B, C, as the price starts changing direction here, how do we know the price changing direction? The price will come out of the channel, the declining channel, break above, retest. It did exactly that here. You see, came out first and retest. Some traders, aggressive traders, when they see it come out, they will buy, only to be taken out by the pullback to retest. And they will say, oh, the system does not work. Oh, this thing does not work. Pay attention to the price. Draw your lines, okay? Draw your channels out of the channel you see here. The blue channel you see here. Out of the channel, break above, retest, turn around. Next target, price going up, price looking for a better resistance level. The next resistance is this one. Look on the left hand side, this level. It changing direction here. People took profit. It pulled back again. Draw your trend line. Take it step by step. That's what's happened. Boom. Do not assume that the price will definitely reach the target. It may not. It may go horizontal for a long time before reaching the target, or it may just come down. The price will move up if the fundamentals are solid, which means business is growing, they are making money. If Amgen is not making money, the smart money will sell. Doesn't matter whether you see a pattern or not. So take it like a business and understand that the price is moving from A to B, but the price will not move if the fundamentals are not solid, if the global economy is not bullish, if the cycle, the sector, talking about the sector to which this stock belongs to, talking about the trading triangle, you see, The market first, the sector before individual financial instrument, the heart of the trading triangle, the leaders, the news, and the fundamental. You, as a trader, will manage the trade and understand what is taking place. You may see the most beautiful setup, but if the next day the company came out and gave an earning warning, the price will go down. The technical and fundamental, combining them together, paying attention to the news, that's the way professional trading. Losing trade will take place, but we want to achieve consistent winning trade using the technical with the trading triangle. So here we will say the price has a high chance, not certainty, not guarantee. You see, because some traders, it's the way their mind function. You see, 1 + 1 = 2. Why mark the cross above the signal line and the price did not go up? Well, why? Why mark the cross below a signal line and price did not go down? Why? But just understand, the price moving from A to B, or why the stochastic is overbought, the price did not go down. Well, the price does not have to. It's not because the stochastic is overbought that the price is overbought. The overbought stochastic is different from the overbought price. Yes, understanding the price, understanding the market is the key. So now moving forward, talking about the formation of the bearish butterfly pattern. At this point in time, they will set their target at 127 Fibonacci extension. If you want to know more about Fibonacci extension, go to www.dayprotraders.com. So we will draw our Fibonacci extension. You see that I didn't draw it to the point here because the price closed here. You may do that kind of exercise to go into the mind of other traders, okay, how you draw your line, to see where they will see their 127. If I put it like this, the 127 is here. But if I move it to the closing price, my 127 is this red line here. Prefer to use the closing price because the price went there, was rejected, and closed back here. It worked better, okay? Sometimes you may move it to see what our traders are seeing. Just draw it to know what these people are thinking. Okay, very important. Do not discount it. All right, it's not because I draw it from here, some traders draw it here. You want to know, don't discount it. Okay. So as the price rolling, if it's going up from the C, they will set their target delta in the zone of 127. This is the completion. At this point in time, as the price reaches the target zone, we will say that the bearish butterfly pattern is now completed. But when we were here, it is being formed. But when it reaches the delta zone, the D for delta, we will see that, okay, the bearish butterfly pattern is completed. If we see a bearish cycle here, if you receive a valid sell signal here, we will take it. But we will keep our warning line here, which means, suppose you receive a sell signal here and you sell, and the price return back above this red line. What do? Close the trade, full stop. All right, close it. Do not sell like aggressive trader because the price reached the target zone. If you were already buying, you may take profit here. As the pattern is being formed, you understand what is taking place or what is likely to take place, and the price reach the target zone, you will take it. But it doesn't mean that the price will definitely reach the target zone. As the price going up, you are watching the next resistance level. Price can change direction here, but here you can see break through this one. Fine, but you need to watch it. Next one is the resistance here. Watch it. You break through it again. All right, before hitting the target. Do not ignore the resistance on the left-hand side, just using your pattern or imposing the pattern on the market. This is about practical trading tips, okay? Here you reach our target zone 127. We will say at this point in time, now finally, our bearish butterfly pattern is completed. We will wait. If you receive a sell signal, we will take it. But you can see that it didn't go straight line, which means you can enter the trade here being taken out. You see there's the green one, boom, up, another green one here. So you want to know how to enter the trade, how to participate in a cycle that has begun here, so you do not get in at the wrong time. Okay? So you see here? If the fundamentals are solid, suppose we were here, and suddenly this company came out with excellent earnings. They increased their market share. The global economic condition suddenly has improved dramatically, or the S&P 500 itself has started a new bullish cycle. It will be very, very difficult for this stock, though we have a bearish butterfly pattern, to go down. it may just ignore this bullish butterfly pattern, a bearish butterfly pattern, and just go up. And we will say, oh, now this is a crab pattern. You see? So as the pattern is being formed, be very flexible. Do not impose it on the market, because the price can do whatever it like to do. Does not mean that it will definitely stop here. Can go to 138, can go to 261, can go on. If the fundamentals are sound, the sentiment is bullish, you go up and go up and go up, and you'll be saying, oh, mumbo jumbo pattern. But it's just because you fail to understand the language of the price is still in a rising channel, and you were selling, or the price break above the resistance level, retest it and find a support, and you still want to sell it, okay? So this is about the formation of a bearish butterfly pattern. In the next video, we will discuss the psychology of a bearish butterfly pattern. Thank you for watching. We are the TSTW SYS 08 traders. Speak to you soon.